Hello, and a massive hello to everybody. How's everybody doing? Hope everybody's having a great day wherever you may be, whatever you may be doing. This is 50 pips, rocking and rolling here, 4th of February 2018. No trade calls, no recommendations, or response for their own stuff. We're here for educational purpose only. So, what's going on as we go into this interesting week? Well, basically, on the data front, we do have quite a lot of things out. So we got services PMIs out of the UK on Monday. We've got Draghi speaking. We got ISM out of the US. On Tuesday, we've got the RBA with the rate statements. We got trades balance out of Canada. We've got unemployment out of New Zealand. And then on Wednesday, we've got the rate decision out of New Zealand. We still, we're going to have crude oil inventories as usual out. And then on Thursday, we've got the BOE rate decision. We got a bunch of stuff out of the BOE, and again on Friday we got more out of the RBA and some other UK data and Canada data. The main focus, however, really is going to be what kind of follow through we see with the moves we saw in equities in the back end of the week, right? So finally, surprise, surprise, volatility pops. It's taken a while, in terms of the move on the equities. We haven't seen that kind of a sell-off, I think, in about 2 years or something like that. So clearly there was, caught a lot of people off guard. A lot of people haven't seen that, but all things being equal, nothing crazy. So here we got the VIX moving back into, more normal-ish territory. Nothing too crazy is happening. Again, unless you see the VIX up something like, 70 to 100% in a day, it won't get super ugly. But still, off those lows, it's not too bad. Off those nines, we're up about almost up 100%, but not in a day. So it's not going to cause any huge panic. But you see that volatility does come back. Now, as we said, the focus is really on the equity side, with a lot of these indices looking a little bit heavy. Now, again, a lot of people calling for crashes, etc., and getting really excited. There's not that much to get excited about, really. It's just something that it's a healthy correction. It would have been much healthier if we saw this come back a while ago. And again, let the levels guide. Let's see what happens. But all things being equal, market being down 2, 3, 4, 5% of the day is really nothing extraordinary unless you're 20 years old or have only been trading since the election, right? So, and if you see this across the board, you see the DAX, we had this very nice sell signal on the weekly. We were stuck on this range. We talked about this, that was a nice little move back to the bottom of the range. Now, the big question is it going to get more traction or not? And it looks a little bit more ugly if you go on something like the daily. So if you put the 50, the 100, and the 200 on, see how ugly it becomes. This is a knife through butter all the way through, and now we've got the 200 DMA here. If you look at it on the weekly, with that 50 coming in, you see how clearly if we can't hold this level early in the week, the potential for a bigger correction is very, very ugly, especially if it comes with velocity. And on the daily, clearly the focus is going to be, how do we deal with this 200 DMA, right? Close above, bullish for some kind of a bounce. Close below, very, very bearish in extensions. So keep in mind that with this kind of move, it's very rare to see the market open up and not probe these lows again. So if anything, you'd expect gap down, and if it's going to bounce, it'll bounce after a gap down. What you want to see on any bounce is, do you get a real bounce, or the bounce is going to find sellers? Any bounce that can't get back above the 50 DMA, you'd consider new lows to come and the market to try and press considerably lower. And you see that across the board. I'm not going to go through all of them, but just, I know a lot of people write in, they like to look at the FTSE. Look at the FTSE here, right? We had this level which had been holding for an awful long time. This looks like a false break. Knife through butter, all the moving averages as they get very, very tight because we've been going nowhere for so long. Daily close below, this looks ugly, and all these levels are going to be very, very vulnerable to get tested. Now, and it's a very same dynamic across the board, right? You see here on the nice little move down on the ES. Now, again, we've been bearish and we've been talking about a correction, very nice little failure on the daily here. We expected to see this was a chance we could try and finally get that move back into the 50, but there's nothing really to to get too excited about, because most people like us that were looking for some kind of a healthy correction have been looking for that correction for a long time. So being wrong for a long time, this whole ramp up. So, it's just the market behaving in a healthy manner. But clearly the weekly was heavy. And you see here that if we're going to still, in terms of a healthy correction, there's an awful lot of room to the downside we can still move to, even if we're going to end up higher. But all these trades, you had very nice chance to take a stab. Anytime you get these kind of failures at all-time highs, you get a chance to trade with very, very nice risk reward, under 1% risk for 5% reward back into this level. So they're all, and it's the same trade across the board. But what you want to watch here, again, going into the week, very rare for us to bounce off, open higher and stay higher. Chances are they'll still gap down, and then you want to see how it behaves at that 50. You see, this is very extended, so this could easily come back into any of these levels and still hold a very, very strong uptrend, and you'd still expect buy the dippers to come in unless it gets very, very ugly. Right now, if we can't regain, the way we look at it, if we can't regain the 2800 quick at the beginning of the week, we'd expect to see 2700s come very, very quickly. The healthy move here would be for the market to gap down a little and then try and stabilize, try and catch a bid. What you want to watch for in terms of what all these people saying it could get ugly is if it can't catch a bid. If it can't catch a bid early, it can't stabilize Monday into beginning of Tuesday, then it'll likely be heavy all week. But it's the same chart across the board, right? You see this daily reversal at new high on the ES. You've got exactly the same trigger and exactly the same candle if you look at something like the NASDAQ. And it would be healthy to see the move back into 50. And you've got exactly the same kind of move if you look at the YM, right? Failure at new highs. It's just the velocity that's catching a lot of people off guard. And here on the on the YM, what you want to look at, if we can't regain the 26K quick, then 25K is going to attract a big level with a 50 coming in here. Breaks below there, you'd expect to see 24. So you see how they're lining up quite nicely with all these moving averages, and then the 23,000 is lining up with the 200. It's fairly nice the way they're lining up with the round numbers. So that's what's going on in the equity side. What else have we got going on? Well, a lot of people asking about Bitcoin. No big change for us on Bitcoin, really. Our base case here is that once we couldn't hold the 10K, we were looking for the lower end of the range to get tested and this 200 to come into play. And this is a big pivotal level around 8,600 and the 200 capping here. So as long as we can hold this level, you'd expect to see some kind of bounce towards the 10,000, which will be pivotal again. But if this can't hold quick, then we still expect, our base case is still that we're going to see a move back to the 6,000, 5,000. Let's see what happens. We're not making any call on this long term. We're just looking at the levels. We're looking at the chart and letting the chart guide us. Back above 8,600 quick, then we got a chance to try and rotate higher. We can't hold that, then we expect to come back down here. Now, what else have we got? And here it's all a dollar trade, apart from those equities, it's all the dollar trade. So what's been going on the dollar? So the way we look at things, as we said, there's still a lot of room to go to the downside, and ultimately we expect this 87, 83 level to come into play. But ultimately nothing's happened right now. Of course, some people have made money, some people have lost money, but nothing much has happened, because if you remember what we said in the last update is it's all about us being stuck in this range, right? You see this daily range here? We said unless we break outside of this daily range, you'll likely see a lot of people getting very, very excited, but structurally, fundamentally, nothing much has changed, right? And if we just draw a little box around that, we're still inside. So our base case hasn't changed. We can switch time frames. We can put as many indicators as we want. We can, turn the chart upside down. As long as we don't get a break outside this day's range, there's much to do about nothing. It's just velocity of move inside range. And what is the way we're looking at it? Again, Daily close below, move below. We expect that 87.20s to come very, very quick. Daily close back above here, we expect healthy move higher. It's been a long time coming that we see a little bit of dollar strength coming in and shorts covering, and we'd expect to see a very quick move, potentially all the way into the 92, 91, but we'd expect sellers to still come in here if this is going to stay in trend with all these moving averages and ultimately continue the rotation lower from there, even if it bounces. So our call is still that we're going to tag lower. The big question going into the week is, are we going to break out of this range to the downside and go straight there, or are we going to break higher and then fail from a higher level? Okay, and that's exactly the same chart across the board, right? Look at euro. So if you look at euro, widen it out, there you go. There's that daily range, right? It's still stuck. It's the same chart across the board. What is happening is we're getting the healthy little move, which is, if you look at the DXY, right, after this aggressive move lower, the candle is showing a pause, so the market is trying to rotate higher, yeah, even if it's still stuck inside this range. And these moves, you know, all started, it's the same chart across the board. You can see it with euro. Go on the shorter time frame. There you go, euro 4 hour. You've got this 4 hour reversal, and it's trying to hold this reversal in a sloppy fashion and see if it can correct back lower. The nicest expression of this is on Aussie. 4 hour reversal at highs, and it's coming back down. And it's exactly the same chart if you look at Kiwi. Much bigger. Still the same 4 hour reversal, and it's trying to hold for a little correction. Okay, now what's happening on Aussie and Kiwi since we have rate decisions? Well, Aussie, our base case hasn't changed. It's time for a healthy correction, this dollar bid to come in, and we expect to see this move back lower into let's get on the weekly. This chart we've been posting on the blog. We expect this to come back into this 200 DMA, and then we have to decide. You know, you'll see all this cluster coming in here essentially at the 78, 77 level, and we think here the call is we're coming back into this level, and then depending on how the dollar trades, depending on what we get out of the RBA, either we're going to set up the next move higher or we're going to correct a lot more. For now, one step at a time. Our base case is still that 4 hour failure was the tell for the move back below the 81 and a move back into, you know, 78s, 77s into the RBA. And if you look at the Kiwi chart, let's go back on the Kiwi. This is also, we've been looking at this on the weekly. It's a little bit less clear. The data has been very, very choppy here. So, you know, still stuck inside this bigger level. Look at this 200 as you know, the bull bear line, but we feel this is far less interesting than the Aussie. But, you know, above into that high range, below, it could try and break through all the way back down. But the Aussie is clearly the most interesting chart as far as we're concerned there. In terms of the equities, you know, you really want to watch the tech space. Our base case is still that Apple has quite a lot more room to go to the downside. We posted this chart many times to start with when we start to get this series of negative closes here. Then we get the fourth one, you know, our base case here that we're coming back lower, and it's very big test. If Apple can't bounce quick this week, you know, it's going to be very hard for the indices to stabilize. So you really want to watch Apple. And if you look at something like Google also, right, let's go back down and let's get Google here. You know, and another big tell, that's a very, very ugly trade, right? And there's a lot of room to come back down all the way into that 200, a lot of room. If you look at the weekly, shockingly bad too. Not pretty. Now, of course, what's holding everything up, you know, the day, you know, everybody who thinks Friday was ugly, Friday could have been much, much uglier if it wasn't for God's gift to stocks, which is Amazon, of course, right? Which is still, all things being equal, holding relatively bid. Our base case is still the same on Amazon. Just to put this into perspective, into those highs, it's been up, 28% from the beginning of the year. Now, if you want to freak yourself out, do some maths and look what that represents in terms of market cap and dollar notional. That is just insane, okay? Our base case here is still that this was the tell and the top, as we've seen across a lot of indices and a lot of charts. And then we just got a little bit of profit taking and earnings madness. But right here, there's a lot of room to correct to the downside. So here, especially if equities hold heavy and you start to see Amazon let go, then watch out on the stocks. Here, we'd look at this top day and the day before the earnings as that range on the DXY or on the euro. That's the range. Bullish above, bearish below. Bullish above, any new high is possible. This could continue to be irrational longer than you can stay solvent, but sooner or later, everything comes back to reality. Early in the week below, then things that get very, very sporty across the board. I don't want this video to get too long, but let's do crude. Crude, again, we think crude's clearly something you have to keep an eye out for here. We've discussed this in detail, so I'm not going to labor too much. We've got that high, which is basically people are calling the devil high, 6666. Watch out what happens there. The big support to the downside is around these mid 62s, right? We still think that the room to the upside is, the upside is going to be labored from here into the 70s. And even if it's going to find some support into those mid 62s, we think the path of least resistance in terms of velocity is going to be on a break of 62s all the way back down into the 55s, right? So clearly here you've got about $5 to the upside, 65s into 70s, and you've got about, $2 or something to the downside. So all the way down could be a $7 move, but we think that both this $5 move and this $2 move here, if we get it, is going to pale in comparison to the velocity of move you can get if we break down below these 6250s all the way back down into these 55s. So that is what we're most focused on. Now, a lot of questions coming in on the bonds, but really very little has changed. I don't know how to be more explicit on the bonds. I'm just wondering if the questions come in because people don't like what they're hearing, but our tune on the bonds hasn't changed for forever, right? So it's the same thing if you're looking at the ZNs. Here, our base case is still that we are in a rotation lower, and that on this break here, either we were going to get a bounce or into the 120s, into this 123 extension. That's the next support, right? So nothing much has changed for us here. What you want to look at is how we react at this 0 and at this 123 extension. So after such a move down, would it be healthy to see a bounce? Sure. But in terms of the bigger picture, unless you're trading intraday time frame here, as long as we don't get back above that level, this is still our base case, right? Once we get there, knife through butter, we're looking to much, much lower. If it bounces, then you could see a little bit of a move higher, and this is still going to be a pivotal level. So again, wouldn't be surprised to see a little acceleration lower at the beginning of the week, and then we can bounce. But as long as the bounces are sustained, and as long as we don't get anything that gets it back above this breakdown zone, a real breather is going to be hard to get, right? And if you look at the ZBs, very similar kind of discussion on the ZBs. Our base case here, once we broke out of the box, was since it just went knife through butter. We said as long as it can't get back inside quick, path of least resistance has to take out this support, bottom of the bigger box. And what's happened on the way back down? It's knife through butter. So you see, if you were looking for a bounce, this is when it tried to bounce. 2-3 days, it tried to bounce. And that's where you would have expected the healthy bounce. The fact that it tried to stabilize 3 days knife through butter here, well, it just ain't looking good, right? So unless it can get back above this level, path of least resistance is much, much lower, right? Is much lower. We're still looking for it to come back into, this whole 140 zone. So again, would it be healthy to see a little bit more bouncing, more correction? Sure. But if you know the bonds, when they unwind, right? And it's the same thing with the equities. It's very, very, we talked about Newton's third law, et cetera, et cetera. It's very naive to expect that when you get something like, whether you're looking at the equities or the bonds, that goes in a one-way train with no pullbacks in crazy fashion, it's not realistic to expect the unwind to happen in a healthy manner, right? That's the crux of it, right? So let's see what we get going into this week. It should be a very, very interesting week. Heads up to all the 50 Scouts guys. I'm going to post a reminder on the blog. There's going to be an invite for a free pass to Friday session. That should be interesting. We've got a lot of stuff to cover. But again, let's see what happens. Let's see if we get some, let's hope we continue to have a lot of volatility. Let's hope we continue to have aggressive moves, whatever direction they come. But it's going to be a very, very telling beginning of the week. Wishing everybody an awesome one. Thank you so much for following, for sharing, for for the banter, for all the questions that come in on the blog. Talk to you guys soon. Take care. Bye-bye.